Thanks for joining us for another edition of Issues and Answers. I'm Ian Boyne. Today we talk the economy again. We talk finance. We talk the exchange rate, the kinds of things that you want to hear about. We have with us the governor of the Bank of Jamaica, Mr. Brian Winter, and we are going to be putting to him some of the questions that you would have asked him if you had the opportunity. We thank you so much for your company. Governor, good to have you on the show.
Very good to be here.
As you know, people's attention has been on the exchange rate. This is not something that is ethereal or away from them. It is something that affects them in the pocket.
Well, I think for Jamaica,
Yes.
just being very practical, we did have an overvalued currency.
But overvalued.
Yes. An adjustment has been necessary. And that adjustment was necessary to help to compensate for the fact that our inflation rate in Jamaica, prices here were rising faster by quite a lot than the prices in our trading partner countries. So an adjustment has been necessary to compensate for that. That adjustment has happened in a major way in the last 18 months to 2 years. And so the worst aspects of that are behind us.
Fast.
And
So we
our
should not be
issues-
seeing an aggressive movement in our exchange rate. That's what you are saying.
I think starting with the fact that our exchange market is a market-determined rate, rather. The rate is determined by buyers and sellers in a market. It's very open, and we publish what we call the exchange rate in Jamaica is the average of all of the buyers and the sellers, and we publish that every day. So it's a very open market, and that makes sure that we are counting every trade. Having said that it's market determined, its adjustment, it's the depreciation that we've seen should slow, has been slowing relative to last year, relative to the year before, because we are seeing lower and lower domestic inflation. Bank of Jamaica is very focused on keeping that inflation rate down. It's still higher than we would like it to be, but it has come out last year below our target range, which we're very encouraged by. And this year, so far, inflation is coming out at the low end.
Which is what?
Of our range. Well, inflation last month was just put out by Statin at 0.1% for the month of June.
Annualized, that would be.
Annualized for the 12 months, that's 8%,
8%.
which is right in the middle of the range that we've projected for the full fiscal year to come. But for the first quarter, the first 3 months of this fiscal year, 0.1 in June, similarly low figures, we've seen for the whole quarter, for the fiscal year so far, 0.8%. So the 7 to 9% that we expect when the full year unfolds, the remaining 9 months added to this, this gives us a good reason to expect that we will come within our range or nearer to the bottom of it.
Yes. The Bank of Jamaica saw it necessary to intervene in the foreign exchange market last week. Was this a late acknowledgement that your hands-off policy was not working, and was your hand forced?
No, not at all.
Why the intervention?
There's a lot said about the intervention and about whys and wherefores, a lot of discussion in the public
Yes.
domain. But the bank's policies with respect to intervening in the foreign exchange market have not changed.
Hasn't changed?
Have not changed. The bank intervenes and has, throughout all of my time as governor, and I believe before that, intervenes in the market to address issues of when the market reaches a point where it either is disorderly or it's approaching or about to become what we call a disorderly market.
But why
Now,
didn't the bank intervene before, Governor? The discussion about the exchange rate has been going on intensive for about 6 weeks and so on.
Well, the bank has intervened before. So we have intervened during this year. We've intervened on at least 2 other occasions during this year so far. We intervene as necessary. So the conditions just prior to our intervention, in our judgment, had reached a point where the pickup of the pace of the adjustment, which we saw, was not supported by any economic foundation.
So people were speculating on the dollar.
Well, in fact, the economic information was pointing in the other direction. Okay, So what we saw was, and this does happen in markets, when sometimes the movement itself becomes the reason why it goes on moving. At that point, you need
expectations, because people
The
have an
view-
expectation that the movement will continue. That
Precisely.
itself pushes the rate.
If I'm selling money,
Yes.
foreign exchange, and I have my money to sell, and I believe that tomorrow the rate, and I'm sure it'll be higher,
Yes.
then I will wait. If I'm buying and I believe it'll be higher tomorrow, I will insist on buying today.
Yes.
So if you just extrapolate that, you'll see that you can create conditions where the rate will move but nothing will trade. Those will be disorderly conditions. So we act to, at that point, as we did last week, to address the excess demand that is driving the situation, which we did. And it effectively settled the market.
And the rate has
Exchange
been
rate-
appreciating. We have
Exchange
moved.
rate appreciated immediately, and it continued in the following days to appreciate, which is settling down some of that fever, if you like. The key
What-
point about the devaluation and depreciation that's occurred so far is that it has slowed relative to previous years, and I'm saying that I expect it to continue to be slower and slower as we go forward. And
But
this is
there's no
because
particular endpoint.
yes, of course, there's an end point. In fact, just
Not in
as-
terms of the rate, you're saying, because it's a market. Oh, there
There
is?
is, just, but I wouldn't call it an end, because every day is a new day. And my point, though, is that as the exchange rate depreciates, it also can appreciate.
We're speaking about some matters that might seem esoteric, but they are not. They relate to you, they relate to what is happening on a day-to-day basis, and they relate to the prospects for your development. The Governor of the Bank of Jamaica will continue to talk to us about the economy when we come back from our break.
It's a family affair. It's a family affair.
Sunday is a family day. We like cook together, talk, share ideas, and help each other. We reason about things.
Welcome back to Issues and Answers. We have with us the Governor of the Bank of Jamaica, Mr. Brian Winter. Governor, would you be committed to saying that the Bank of Jamaica would not want to see the dollar move to 113? You would want to keep it at 112.
As a central bank governor managing markets, one thing we won't do is ever speak about an exchange rate, mainly because we have the capacity to influence it, and then it would no longer be a market-determined rate, which is important to us. But at the same time, I can give the assurance, and I'm making a statement very clearly, that the worst is behind us in terms of exchange rate adjustment.
Yes.
In going forward, we should start to focus on what is the differential of inflation in Jamaica with our trading partners. Bank of Jamaica is committed to lowering the inflation rate, and we've been successful so far. And we believe, looking at our projections for the rest of the fiscal year, that we're going to continue to have a relatively low inflation rate.
With your view that the worst is behind us, would that mean the average person might ask, would that mean that we're not likely to see the dollar go to 114, 115 by the end of this year, if the worst is behind us?
Well, I think we have to
Jamaicans want to understand, what does that mean? The worst behind us and what is to come?
Well, the first thing we have to do is to break the idea of just one number, which I know is
But
difficult
it's
because of the
difficult
direction
because
we've
we have to
come
deal
from.
with, yes.
But I
Can
want
the
to
prices
emphasize-
go up as these numbers go up, Governor?
They do, but it's an interesting issue, because what we have seen in the last year is that the rate at which the exchange rate
Yes.
passes through to prices has slowed down quite significantly.
That's a fact.
That is a fact. It is much less than we have been used to in our historical periods. So the perception or the view that that will happen
Yes.
is understandable because of our history. It's what has happened.
But the facts don't
But
bear that.
in this period,
In this
here,
period.
the facts do not
Don't
bear
bear
that
it out.
out. In fact, and we see cases
interesting.
which reach the newspapers from time to time, where you'll hear about somebody who tried to put up a price and then had to roll it back. So there are price increases. It is in this, as I said, 8%.
People are feeling.
8%
But people feeling
increases.
more than that too, Governor.
Some maybe, others less. but 8% is a good average for the ordinary man in the street, okay? That's what the CPI, the Consumer Price Index, that basket covers an ordinary
Very
person's
few
experience.
goods, yes.
It's a range of goods. I think it's reasonably robust. We could debate exactly which one, but it's the best indicator, and it's a pretty good one. The key is, whatever your indicator is, that you are slowing down that rate of increase. And what happened in the last year is that the pass-through from exchange rate inflation was much lower than the historical norm. Bank of Jamaica has observed that very carefully, and there are reasons for it. And those are reasons are likely to persist. So it is what has allowed us to improve competitiveness in the last year, 18 months, because the nominal depreciations have happened that we've all seen, 13%, 13.3% 2 years ago, 10.8% last year. This year, as I said earlier, it's running at a slower rate than that 10.8%. And for the fiscal year, full year when we get through it, I'm indicating that the rate of that that variable should be quite a bit less than last year's. At the same time, inflation has been lower still. And so our relative price competitiveness with our overseas trading partners has improved by some 9 percentage points in the last year, which in these things I can indicate is a lot. And that's what Mrs. Lagarde was referring to in saying that you've actually done a lot, Jamaica. And when she says a little more to go,
very little,
she emphasized that. That's based on an analysis. Let me just point out what it's all about at the end of the day. It's actually about this exchange rate thing, is about your current account of your balance of payments, or if I could put it another way, your net exports of goods and services. That's what Jamaica has a deficit on that account. That's very large.
Yes.
Meaning that to do the things we do, somebody has to lend us the money, which is not sustainable. So closing that deficit, improving your net exports is a key goal. And I'm happy to say that has improved quite significantly and is set to reach a point of stability sooner than we were initially expecting, which is good news, because in a sense, all this exchange rate competitiveness is about what is the exchange rate that will help you to have a balanced position on your current account.
Finally, Governor, the 800 million that the government has raised, this will give greater confidence in the market and greater stability in the exchange rate with the exchange market, you would say?
Well, I think it does a number of things. I mean, first, it is a very positive signal of the strong international or external investors' confidence in Jamaica. And that, I think, is a very good validation, helpful validation of all the hard work and the sacrifice that Jamaica has been making in this year. And it's a tangible evidence of it. But yes, it certainly on the monetary side eases concerns about the NIR.
Yes.
You know, this must put any speculation or concern about that behind us.
And gives you a greater ability to defend the dollar.
It provides. We will, as I want to say, whatever
we are
level of
weary.
reserves, we will always ensure that there's an orderly market. But yes, having adequate reserves or more puts you in a stronger position, so people perceive
That's right.
the strength behind what you say. And that's very, very useful, and I think it's a powerful signal on the monetary side. But on the fiscal side, it's very important, because what it does, it gives the government funds to now essentially repay debt, which is consistent with their debt strategy. It lowers their interest costs, because this was a good coupon rate relative to what they're going to be repaying, good interest rate.
Yes.
So interest costs fall, which further improves the fiscal balance, creates more fiscal space, so that government can turn towards the things that we know we need to have done, government should do for us in terms of investment and capital spending and so on. So that's good. But also it has addressed the question of, it has met the financing needs of the government for this fiscal year.
Yes.
And even into next fiscal year,
So we won't need
it
any
has now
taxes this year. Yes.
financing needs. It has now addressed the issues of, I think it covers the the bond financing needs for next year
Yes.
as well. So what that means is that the government's profile from a fiscal point of view
Yes.
is now less risky
Yes.
and has improved. And that, I think, is very helpful for confidence and very helpful, therefore, for investors, foreign exchange markets, and others.
Thank you for your very helpful interview today, Governor. We thank you very much.
Thank you.
Governor of the Bank of Jamaica, Mr. Brian Winter, talking to us about some critical issues affecting the exchange rate and other matters. Next week I'll be back. Until then, Ian Boyne wishing you a very pleasant day.